Good morning, Hedgeye Nation. Welcome to another episode of Sector Head Spotlight. This week, a little bit different because we've got the head of equity research, institutional research and sales here with me, Daryl Jones, Jonesy Buds, as he's often referred to on the Macro Show. And really, quite the pleasure. I'm very excited for our conversation. It's going to be a little bit different this week. Normally, for those that have tuned in, we often go through kind of a process and then go background process and then kind of some themes.
Yep.
I think this week, as you and I talked about ahead of time, we're going to go a little bit more background, kind of some fun stories from back in the day. But you've got quite a robust and diverse background throughout the investment kind of community or sort of different sectors and different divisions. So really quite excited for our conversation. So thank you very much. Yeah, thank you for joining. Absolutely. So Daryl, just in terms of a little background, I mean, obviously, if anybody's following the Hedgeye process, or certainly is a key member of Hedgeye Nation, they know that you played college hockey with Keith at Yale. But what they might not know is that you also, I believe you did stints in equity research, private equity or VC, right?
Private equity.
Private equity, and also worked at a hedge fund, correct?
Yep.
Yeah. So before coming here, so it's been so not only is he a fantastic defenseman for the Yale hockey team, but has quite a background.
So I can give you a little.
That'd be awesome.
So coming out of college, I worked at JP Morgan. In banking, which was one of those traditional training programs, which for me, coming from a liberal arts background, was very helpful. It's just intense training in terms of modeling, valuation. It doesn't really teach you about investing or anything like that, but you get the skill sets, I think, to enable the next step in your career. After JP Morgan, I actually went to a hedge fund called Dawson Giamalva, which Keith was actually their salesperson, referred me. And then a couple days later, they decided they wanted to hire Keith as well. So we sort of joined this hedge fund together. I got stuck, for lack of a better word, covering technology, although it was a great experience in many ways. But I sort of came in as it was the last leg of the tech bubble. And then the tech bubble imploded. I think I was there for 3 or 4 years, and then I decided to go to business school, so I went to Columbia Business School. And what drew me to Columbia was they had this great applied value investing program.
Yeah.
So you get taught effectively. You apply to get into the program at Columbia, then you get taught by practitioners, and your project is at that point to you do a stock pitch and you pitch it to Julian Robertson from Tiger Management.
Cool.
Which the irony is. My stock pick was Ace Aviation, which at that time was a holding company for basically all of kind of Air Canada's entities. And the irony was that one of Julian's worst bets, I think, was being long US Air or something like that.
Okay.
So he had lost a lot of money on airlines, although I'm not sure he really cared. So, and I was coming in and pitching him this airline, but Air Canada or Ace Aviation was unique because of a duopoly.
Yeah.
They had a regional jet business that was just generating a ton of cash flow. And then after that, I went to a firm called Onyx, which is one of the largest Canadian private equity firm. And my job there was basically a generalist, finding value-oriented ideas that they thought eventually could be buyouts.
Okay.
So we would invest capital off their balance sheet and take toehold positions, and then potentially develop a relationship with management to buy the whole company or just hold it in a portfolio. So did that for 2 or 3 years, and then took a similar role down in Miami with Hedgeye Capital, which is a very, very large private equity firm. Similar story, leveraging some of the knowledge from within the private equity team to then invest in public markets. And sort of did that into 2007, 2008. At the same time, Keith was leaving his firm, or I guess, basically got fired at the top.
Yeah.
And, I think, we obviously have always been very good friends. And, at the time he asked me sort of what I thought he should do next. And I knew that he'd done pretty well financially. So I encouraged him to, start something on his own, because I knew he's a real entrepreneur. He had businesses in college. And so he developed this idea for Hedgeye, which at the time we called Research Edge. Actually pitched me to join right away, but I had a good job. But what happened over time is I found myself really talking to Keith a lot, talking about the business, and eventually I just found I was more passionate about what he was building versus my job at the time. So I lived in South Beach, which was great as a single guy.
Yeah.
But I decided sort of roll the dice to some extent because I believed in the concept that of sort of reinventing and democratizing research. And it's been a long road in doing that, but I sort of believed in that idea. So drove up from Miami to New Haven, rented an apartment, and we're kind of off and running. I think at that point we were maybe 8 or 9 people.
Okay.
And then Keith and I, the first thing we sort of did together was start the macro product,
Okay.
which 15 or 16 years ago looked very different than it does today. Over time, it's become much more quantitative. We have a much larger team.
Yep.
I think we really are on top of all the data, maybe or potentially better than any other firm.
Yep.
But it's been an evolution and a learning process. And then over time, I sort of have swerved more into management, becoming the head of research and head of sales. So sort of overseeing the institutional team, which has been a lot of fun as well.
Yeah, no, that's awesome. That's a great background, and such much of that I didn't know, Daryl. So thank you. But the other piece that that many might not know within Hedgeye Nation, especially where they kind of typically see you on the macro show and kind of the Q&A piece at the end of the show, it would be that you do have a big piece. You publish the morning note every day.
Yeah.
So you do have a good chunk of process that goes into, goes into that.
So
do you mind just kind of expanding?
My role in research has really kind of changed and evolved over time.
Yeah.
I think based on my background, I'm unique in the sense that I sort of have the ability to some extent to do a little bit of anything.
Sure.
So, when we lost our when we have had shifts on the fundamental side, and we haven't had many lately, but I would help out on the sort of equity research as a coach or mentor to a young guy that was building up.
Yep.
Sort of did that in energy. Done that with Felix to some extent when he first got going in China. But macro, I've always been involved a little bit. Early on, I was one of the guys grinding on the themes deck, and I think I actually maybe originally came up with the idea of the themes, which has played out very well for us, and by the way, become a incredible product over time. Initially, it wasn't. It was kind of okay, but you can see what we presented yesterday. 130 slides. It's just the depth blows me away, and it's a testament to the team.
It's incredible. Yeah. I mean, I shared a tweet yesterday about kind of shouting out Christian and Steiner and Drago and Tex. I mean, the whole team. I mean, it's 5. Richie, I miss Richie. I kind of miss Richie, right? They just absolutely crushed that deck.
Yeah, they grind, and then so I still I write the early look from time to time. I'm involved in the macro process to some extent, and then I do a morning note, which we call the morning shift, which is basically and part of it is sort of born from my own morning process, and then things we do internally that sort of feed the macro show. But the idea there is to sort of contextualize the key global macro data points in terms of how they fit within our view. So are things improving? Are they getting worse? Are there sort of specific outliers we want to highlight? And then, also we look a lot at rates, futures, and just kind of trying to put the whole picture together in a very concise note that typically comes out after all the U.S. data has been released. So, which is, the last data point from the U.S. is typically around 10:30. So then I'll be sort of putting it together during the morning and usually publishing it around 11. And then a part of that which we added is the macro ETFs. So
of course, the re-rank.
That's kind of the here's we're delivering all this information to you. Then at the top of that note is here's what we're doing with it. Here's what you should consider doing with it. And I think all that's come together pretty well over time. So.
Yeah, I would completely agree. And the beauty is that it continues to evolve, right?
Yeah.
Like the quarterly themes has evolved from. I'm still a relative rookie, given the fact that like Hedgeye's been around for 15 years.
Yeah.
I found you guys in 2020. So I mean, so like even the quarterly themes has evolved in terms of like what that looks like in the presentation. Just in the 2.5 years or 3 years that I've kind of known y'all. And same thing with like the morning shift and the re-rank product is phenomenal in terms of for those at home from the re-rank, that's an insider look into Keith's long only portfolio. So he sends basically a rank order of his positions, and then he sends it to the team, and then we publish that within the morning shift. So again, as Josie said, it comes out about 11:30 or so, depending on how much data is out there and that kind of thing. But it's so that's a weekly product a daily product that we send out. And for instance, yesterday, you published the morning shift, and then the re-ranks came in afterwards because of the themes, right? So
sometimes
we always get that out. I mean, it just kind of depends, right? There's not a lot of data out there. I know.
Yeah, there's never perfection, and
completely. Yeah.
But I mean, the reality is we're all busy too, right?
Yeah.
So
yeah.
We do know that people expect certain timelines, but sometimes the world doesn't work that way.
100%.
We're a small company, and we're all trying to do a lot.
Exactly.
Try to do our best.
100%. Yeah. So in terms of if we could maybe pivot a little bit, just from perhaps this is the sector head spotlight, so we've sat down with a number of the sector heads. Still have J-Man Skyver and Steiner to sit with, and then I believe I'll hit everybody. But we're trying to fit you. We're trying to cap you off with you at the end, Daryl, but the schedule just didn't quite work that way. But that's okay. But in terms of the research side of the house, when you're looking at perhaps bringing on a new analyst, I know we've been kind of especially looking for an energy analyst. We had one back in the day, and kind of trying to replace that as a top priority. But we're constantly on the look for kind of new talent. What does that kind of process kind of look like for somebody that's out there that might be interested in joining Hedgeye or putting their hat in the ring? Maybe we can go down that.
Well, I think
kind of
for this maybe applies to anybody on the research side, but for sector head in particular, what we're looking for is a domain expert, so somebody that we feel really knows their industry better than anybody else. The caveat to that is we've had some homegrown sector heads where we thought they had the ability to get to know their industry extremely well. So you kind of need that, and Brian McGough, Todd Jordan, and Howard Penny, prime examples. They just probably know the industry and have followed it longer than almost anybody that's still active. I think a passion for we call it the game is important, but the idea in research, it's about solving a puzzle, and we test for this by having these people come in and pitch us some of their ideas, and you can really see who wants to go the extra length to solve the puzzle and come up with the conclusion, which is is the stock going up or down. And I look through all of our sector heads, and across the board, whether it's Rob Simone, Jay Van Skyver, on down the list, Ami Joseph, when they've come in and pitched our team, literally everybody said we have to hire this guy. So there's a little bit of it when you see it. The passion is reflected in their work, and then I think the other thing too is there's a dispassionate component to it as well, which is the analytical side. So nobody, you can't have somebody that's married to an idea or position. They have to have the mental flexibility to admit they're wrong, let their work speak for themselves. But it's sort of all those things. And then I think the biggest thing is at times I think people get the wrong perspective of Hedgeye on Twitter and who we are and the culture we have here, but we're very collaborative, open, welcoming culture. And I think whenever you have a smaller team, you need somebody that you feel can fit into that easily. So
absolutely. No, absolutely. And I mean, Tom Tobin said it on the call this morning in terms of just evolving and learning, right? And even though he's a seasoned veteran as well, he's continually evolving his and they all are. I mean, it's incredible the amount of evolution that basically it's the almost opposite of what you would call or what you would see at a Morgan Stanley or JP Morgan. Again, I'm not hating on those people. It's just kind of a fact. You have seasoned vets. They kind of cover the same companies and have done so for 20 years, and they have their own process. But as the game evolves, they don't necessarily evolve with it.
Well, I think the job at those firms is slightly different. I'll give you an example. I interviewed somebody earlier this week, who would be a metals and mining analyst potentially, and I won't say the firm he's at, but the reality is, even though there's some regulatory things in place now for this, he's still somewhat has to be aware of the banking side, right?
Absolutely.
So
it's a big piece of the puzzle.
He has to be careful to some extent about what he writes, how he writes it, what his ratings are. And I think for somebody that, I think this individual could be one of those people, but somebody that's just passionate about the research, that's a tough place to be. Not to say that any of these firms are bad or the people there are bad, but
exactly.
what we do is peer research, right? So
Yeah.
you either pay us or you don't pay us based on whether you think we're doing high quality research, and over time we're more right than wrong.
Yeah.
So,
No, you're spot on there. Absolutely,
yeah,
absolutely. Sorry, I lost my train of thought. It's not
that's
a big
it.
deal. So we'll,
It happens.
it does, it does. So why don't we sort of pivot a little bit in terms of, kind of, you're on the Mac Show every day.
Yeah.
In terms of like broader themes for 2023 that really stand out to you, and it doesn't have to be macro oriented,
Yeah.
it can be sector style, but we'd love to just kind of hear your thoughts in terms of some things that, again, like I think. I don't want to speak for you, but I think from an investing style, you're different than Keith, and
Yeah.
in terms of maybe not touching your positions and portfolio as incrementally as you might. Yeah, I'm talking about your. We don't have to get into your PA positions, but
Yeah.
just in terms of your out, like the way that you think about the investing is perhaps a little bit more longer term, and a little less. Like,
Yeah,
kind
I
of
think
like,
for me,
that makes sense. What I'm
yeah,
getting at?
no, like I have a more challenging time with the day to day or week to week trading,
Yeah.
and I think it's an issue a lot of people have. To me, it's more of I tend to be a chaser, right? So I've recognized that over time when I feel the need to chase, I just do a smaller position and
Yep.
get that out of my system.
Yep.
But for me, the quads over time are a pretty good guidepost, right? Where you're getting a series of similar quads in a row. We had that with kind of quad two coming out of the pandemic, where one could argue that we were late to the rally, but then we stayed with it, sort of through its duration. So there's a lot of alpha to capture there, and then sort of coming into 2022 with this sort of foreshadowing of quad fours and what we thought was going to happen. So for me, like coming out of the pandemic, eventually sort of go quote unquote full on risk, where more exposure to equity, etc. And then probably coming into 2022, I got a lot more conservative. And have generally stayed conservative. I tend to make changes when I guess there are displacements where I think there's sort of more of the risk has been priced in or priced out to some extent. But yeah, I think from a top down perspective, for me, seeing what Keith's doing every day in the macro ETF stuff is important and great signs, and I'll at times make changes on that. But a higher level, it's sort of the quads and how that's all changing, and that sort of goes to what I do every day because I'm sort of looking at the granular data and watching it. I think China is a pretty good example of when the signals line up. Keith's quantitative signaling process. There's potentially a pretty good economic recovery story in China that to some extent we've already seen data points that have played out that way. But on Friday or tomorrow we have China PMI. So to the extent we get more validation of that, I think that's pretty interesting. And at the same time, you have China, really loosening monetary policy, where most of the world is still tight or tightening, right? So I think you have the China, you have still I think playing quad four as that plays out. In terms of stocks, obviously, if we're thinking about China, I think some of Felix's names are ideas to look at. I always enjoyed Brian's research because I think he's always good at providing you both longs and shorts. Where I really like Brian's research is when economic recoveries start to happen, because he does his stocks really have the potential for sort of exponential acceleration, right? And especially in a time where, and I don't think we're there yet. I'm sure Brian would say the same thing, but eventually, all these inventories in retail get sold
Completely.
and the margins come
Kinda like a
down a lot,
reset.
but then we have this sort of reacceleration where margins expand again, inventories are low, economic demand comes back, the consumer is in better shape. So I think retail is a great sector to play actually within our quad framework.
Yeah.
So
No, I would agree. I think it's a great synopsis. And it's interesting you mentioned kind of the quad four dynamic, because last night on the weekly Notebook Review, which is hosted on Spaces and will be up on YouTube here later today, but there's a gentleman, Brian Nurick. He was kind of saying one of the best things about Hedgeye was that he pivoted in his 529 plan for his kids back in kind of like late 2022. to basically fully cash, and he's been tracking that, and it's saved him, basically 2 years worth of college, in terms of the just being out, right? In terms of like a president, our core foundational principles are, preserve, protect, and then compound. So I always try to reiterate that, right? It's preserve first, because we work hard for our hard-earned capital, and then it's protecting it in terms of incrementally getting in and out, or sizing the positions according to volatility, adjusting those. And then lastly, it's to getting the juice, right? So compounding them, and for those at home, I think that's a really important piece. And there's a lot of different ways to skin the cat in terms of how to accomplish that task. So it's good. Well, we're coming up here, and I think those at home would be very upset with me if I didn't at least get a story or two from between you and Keith. You guys have been boys or buddies for a long time. We don't need any dirt, but just a fun story that I think would be awesome to end the conversation on.
Well, one of my favorite stories about Keith is, which sort of speaks to who he's become over time, because he really likes to take on the establishment, right?
Yeah.
And, as much as people want to try to rein him in, that's never going to change. You always see somebody that needs challenging, and he's going to challenge. And, I think the first time I really saw that come into play was when we were in college playing hockey. We played Cornell, and I don't even really remember the score, but the Cornell coach, I think, was yelling at Keith while he was on the ice, and so we, after the game, and Keith, of course, if you know Keith, he remembers things like that. So we're, and the Cornell coach was a very renowned coach, is actually still there, but we're in the lineup shaking hands after the game, and comes up to the Cornell coach, and Keith shakes his hand and doesn't let go of it. And so this whole melee ensues. But I think that's, to me, an early sign that people can say what they want about him or do what they want, but if he's going to tell you what he thinks of you regardless of who you are as well. So and, I think that over time is something that is important, has been very valuable for us, because a lot of people are they're not willing to call somebody out until everybody else is calling them out. Where I think in general, maybe we call people out too much, but in general, we've been pretty spot on with some of these things. And it's a recognition that, a lot of these talking heads, or people that, other people think are prominent, there's more to the story than you realize. And, you're seeing this all uncovered right now within the crypto and banks and et cetera. So
the charlatans of the world.
Yeah,
that's
exactly.
right. Yeah, that's a great story, and appreciate you sharing that. And appreciate your time with us today. It's been a good one. For those at home, hope you enjoyed that. And next week we'll have J-Man Skyver with us, same place, same time, Thursday next week. Should be a good one. Tomorrow we've got a beginner's guide, and later today on Twitter we'll be hosting a Hedgeye and Friends with Brian Nurek, who is our kind of Hedgeye Nation's resident Muni guy. So I hope you can join us. It'll be at 7 p.m. here on East Coast time on Twitter Spaces. All the best. See you next week.